I'm honored to speak to all of you, and also I know it's the evening where many of you are, so thank you for taking the time. I'm excited to talk to you about what Stellar makes possible and how it connects the world's infrastructure, especially as you are thinking through this law on virtual assets in Ukraine. First, I want to just briefly touch on the next slide. There we go. Sorry about that. I just want to give a brief overview of the Stellar Development Foundation. As Danelle touched on, our mission is to create equitable access to the global financial system. We do that by focusing on three main strategic pillars. We foster sustainable use cases, which means working with businesses and developers that are building on Stellar. We work to be the blockchain people know and trust, which means talking to regulators and lawmakers and other key stakeholders like yourselves to help educate about blockchain in general, and also, of course, the Stellar network and its technology. And finally, we work to ensure the robustness and usability of Stellar. So we shepherd the code base and work to make sure it stays safe, secure, and stable. So actually, before getting into Stellar specifically, I want to talk about a key paradigm shift that blockchain technology enables. So as many of you, I'm sure, know, back before electronic money, the focus for keeping a payment system secure was on the asset itself. Whether that's metal coins or paper bills, it was all about design the asset in a way that it can't be counterfeited and that individuals can safely and securely transfer value. When we then get to, I'm sorry, Carolyn, could you go to the next slide? When we then start talking about electronic money, the old paradigm is that in order to make that electronic money safe, you need to control the entire infrastructure. And that means controlling the database where you keep a ledger of who owns what, and controlling the messaging systems for how the different parties update those databases. And it makes complete sense that the focus was on controlling the infrastructure with the technologies available at the time. But we all know what this leads to. By having separate infrastructures, and Carolyn, if you could hit next, this leads to separate, disconnected, inefficient systems. I'm sure everyone here is aware of the current difficulties, especially with cross-border payment systems. They take a long time, they're costly, and they're complicated. And again, this is because each payment system needs to control its entire infrastructure to keep it safe and secure. If we move to the next slide, we then switch to the new paradigm, which is blockchain technology means, once again, people like you can shift the focus to the asset itself and create safe, secure digital assets, but on a common infrastructure. And this is the key. We of course have an obvious precedent for the power and the possibilities that can be unlocked by working off of a common infrastructure. It's the internet, of course. And we believe that by moving payment systems and moving digital assets to common infrastructure, it could be possible to make sending money as easy as sending an email. It leads to a connected, interoperable world. So I'm now going to turn to talking about Stellar, and I'll mention, I of course am going to focus mostly on Stellar. It's obviously what I know the best, but these general concepts will also be useful for you when you're thinking about blockchain technology in general. So a lot of these concepts are applicable. So what is Stellar? Stellar is a decentralized, open network that connects the world's financial infrastructure. And that word connects is really important. And Danelle made this point a few minutes ago, but it's worth repeating. We view the key is to enhance or add to the financial system, not replace it. There certainly are some people in the broader blockchain community or cryptocurrency community that think things like Bitcoin will replace sovereign fiat currencies. And Deputy Governor Shaban pointed out this concern that central banks rightfully need to think about protecting against the creation of parallel monetary systems. At the Stellar Development Foundation, that is not how we view the world. We believe the most impact can be had by supplementing the financial system, by creating more connections. So on Stellar, it's designed so that dollars can interoperate with pesos, can interoperate with mobile money in Kenya, which could interoperate with a remittance service provider in Ukraine. If we move on to the next slide, I'll now talk about the basic concepts on Stellar to help you kind of wrap your head around how it works. So as I mentioned in that paradigm shift, any focus on Stellar needs to start with assets, because asset issuance is the key. We think of Stellar as creating a universal payment network, again, common infrastructure, because you can, on Stellar, create a redeemable, tradable, digital representation of any asset. It could be gold, it could be corn, or it could be a fiat currency, of course, like the dollar or a hryvnia. And we believe the most useful assets, quite frankly, are those that are tied to fiat currencies. And this is what, when people talk about stable coins, this is what they mean. A digital asset that is tied to or backed by a fiat currency. And very importantly, Stellar was designed with this idea of issuing assets from the very beginning. The creators of Stellar were thinking about this before the word stablecoin was even a word anyone had heard of. And for that reason, Stellar has many native features specifically designed for asset issuers. For example, on Stellar, if I create an asset, I could make it so that any account can hold that asset, or I could make it so I have to authorize accounts if they want to hold the asset. So for example, if I'm a bank and I've issued a hryvnia asset, could make it so that I need to do KYC or other compliance checks, approve an account, and only then could it hold this digital representation. Once again, this is an example of how, even though that digital hryvnia would be issued onto a common infrastructure, I, as the asset issuer, still have the necessary control and governance over the asset itself. We also have features for clawback. So if for any reason I need to reverse a transaction, maybe for fraud, Stellar has built-in features that would make that possible. On the next slide, we now talk about anchors. So this is, how do these assets actually get created? Think of an anchor as a bridge between the traditional financial system and Stellar-based assets and the Stellar network. So an anchor would be a regulated entity. So it could be a financial institution or a money transfer business or a fintech. And they serve as the on and off ramp. So for example, as we see in this slide, an individual could send an anchor 10 fiat dollars through the normal channels, normal payment rails. The anchor would perform any necessary compliance activities like KYC and other AML. The anchor would then issue 10 dollar tokens or 10 digital assets onto the Stellar asset and issue those to the account owned by the individual who had provided the dollars. So in this way, the anchor serves as an on-ramp onto the Stellar network. And then the reverse flow as well. If you have $10 tokens, you can send them to the anchor. The anchor will then send 10 fiat dollars to the individual. And also, very importantly, the anchor would be the entity that holds any fiat reserves backing the digital asset. So if we're talking about, for example, there is a dollar stable coin called USDC. In that case, a company called Circle is the issuer or the anchor. They would hold $1 for every 1 USDC. And actually, the presentation right after mine is going to be from someone from Circle to talk about stable coins. And so I think that'll be a really interesting presentation. If we move to the next slide, we then talk about accounts, and accounts are on Stellar are what you would expect they are. These are how assets are actually held. So everything is saved on a global ledger, which we'll talk a little bit more about in a second. But accounts hold balances, they sign transactions, and they're also the ones that issue assets. Access to an account is controlled by public-private key cryptography. So it is very secure, and these are the same cryptographic technologies and protocols that are used to secure assets and transactions in the traditional payment system. So, when you use a credit card online or traditional banks use these same technologies. And importantly, and again, this is another example of Stellar being designed with asset issuance in mind from the start. Stellar also supports something called multi-signature functionality. This means that on a single account, you can have multiple private keys that need to sign in order to do a transaction. And you can also specify more granular relationships, such as you could have 5 private keys and you only need 3 of them to sign a transaction. With this feature, you can set up more complex relationships such as joint accounts or escrow accounts and others. Moving on to the next slide, we then get to wallets. So you can think of wallets as the interface for how an individual or a business would actually control their account. This is where people can connect to anchors to do those in-app deposits or withdrawals. Again, that was the on-ramp and off-ramp functionality. And it lets people compose, sign, and submit the transactions. And I thought it was very interesting what Association President Dubas was talking about with respect to the fact that in Ukraine, people are very accustomed to using a smartphone to do banking. And so wallets will be a very understood concept. And you can think of it almost as an even lighter weight version of banking on your phone. And wallets and the way they interact with accounts and assets on Stellar can be particularly powerful tools for individuals that are not as well served by traditional banking today, so the unbanked or underbanked. And an example of this on Stellar is there is a company called Leaf Global, which makes a digital wallet specifically designed for refugees. And by using this, as they're crossing borders in pretty vulnerable situations as refugees, they can hold funds on this mobile wallet and they can send it and make payments and not have to worry about holding large amounts of physical cash, which of course could be stolen from them, and it could threaten violence. If we now move on to the next slide. We now zoom out a bit. So we just talked about some concepts that probably make a lot of sense. They're clear analogs: assets, accounts, wallets. Now we zoom out and talk about what actually is the Stellar network as a whole. So the network is made out of nodes, and nodes are just computers all around the world that are running the Stellar core software. And as Danelle mentioned, this is open source software. And each node keeps a copy of the ledger. The ledger shows who owns what. And very importantly, anyone can run a node. Stellar is open, meaning anyone can join, and it is decentralized. all of these organizations, and by the way, this on the slide is a visualization of the network. These are all independent organizations. And sometimes when you hear people talking about blockchain technology, you may hear a discussion of permissioned versus permissionless networks. And that simply means, is it open or not? A permissioned network would be one where you have to be let in. Someone has to approve you and allow you to join the network. That's permissioned. Stellar, on the other hand, is a permissionless network, meaning anyone can join. And we at the Stellar Development Foundation think this is a really important point, because permissioned blockchain networks run the risk of getting us into the exact same situation we're in now, where you have disconnected, siloed payment systems that don't interact well with each other. Again, thinking about that paradigm shift, we think the real power of this is working off of a common infrastructure. So we think permissionless networks are the most important and will create the biggest changes. And I think it's worth making one other quick point. Another counter people will sometimes make when talking about digital assets and thinking about these technologies is they'll say, well, couldn't you build a centralized system? You know, couldn't you just use a database that would be much faster than all of this? And the answer, of course, is yes. If you could somehow come up with a centralized payment system for the entire world, that would be faster. But of course, how are you going to do that? There are significant coordination problems. Who would own it? Who would control it? And certainly when you're talking about something as important as money, something as connected to sovereignty, and nations, it just is not practical to think about a centralized system. Moving on to the next slide, I want to just say a few things about the ledger itself. So the ledger, it's like a normal bank ledger. It's a list of accounts and then balances in each asset for each of those accounts. And it's synchronized across this network of all these different computers or nodes. It's stable, it's secure and transparent. It's stable because by copying it across many, many computers, if one goes down or breaks, you obviously still have hundreds and hundreds of copies. It's secure because, as we talked about when talking about accounts, everything is controlled by cryptographic keys, and it's transparent. And for us, it is, we use something called the Stellar Consensus Protocol to keep every copy of the ledger in sync with each other. And on the next slide, I wanted to just show you a quick comparison, because there are different approaches to keeping the ledgers in consensus. And you can really think of this as, this is the way you keep the entire network secure. So probably most of you have heard of proof of work. This is how Bitcoin works, where each computer is sort of in a race to solve a very hard computation problem. There's also something called proof of stake, which the Ethereum blockchain is planning to move to. That's where validators put a certain amount of capital or money at risk. And if they approve bad blocks of transactions, they could lose that money. And then finally, our protocol falls under a category, it's something called Federated Byzantine Agreement, which I know is a mouthful. And there on Stellar, when you join as a node, you actually specify which other nodes to trust or to listen to. And every node does this, and these overlapping trust relationships are what create consensus across the network. And I'll just point out one key difference between how Stellar does consensus and proof of work or proof of stake. On proof of work or proof of stake, the other validators are completely anonymous to you. So with Bitcoin, for example, if somehow an entity were able to get 51% of the total computing power on the network, they could start to manipulate the chain and they would be completely anonymous to you. On the Stellar, the way Stellar works, for someone to try to manipulate the chain, they would have to convince 51, they would have to convince many other nodes to trust them, to point towards them. So it's a way in which credibility becomes the way you influence a network, not simply computation power like proof of work, or how much capital you have like proof of stake. So moving on, we finally get to payments. How does money move? And this is kind of the whole point of something like Stellar. So on Stellar, there are 3 simple ways to move money. You can do a payment, which is you just move one asset. I send USD, you receive USD. We could also do a trade, which is what it sounds like. I give you USD, you give me Euro, and that would be done atomically. So there's no danger that I give you USD and then you run away and don't give me the Euro. It all happens at once. And then finally, we have what's called a path payment, which is sort of a combination of those two. I can, using Stellar, say, I have dollars, I want to get Euro to my receiver, I'll send the dollars, Stellar will automatically exchange those dollars into Euro using a built-in order book exchange, and the receiver on the other end will get Euro. So on the next slide, let's look at what this really looks like. This general picture is probably familiar to many of you. We all know how this works today. Cross-border payments end up having to use a correspondent banking system. And again, it's because, like we talked about, it's 2 separate infrastructures and they need to connect somehow through correspondent banking. It leads to this chain of intermediary institutions, which make the process take time, and each institution needs to take a fee out of that. And as I imagine many of you are aware, the Bank of International Settlements has done several studies throughout the years about correspondent banking, and they've shown that fewer and fewer banks are interested in serving as correspondent banks because of the complexity and the cost. On Stellar, on the next slide, we see that this structure is simpler. You have an anchor on either side because, like we talked about, the anchor is what serves as the bridge from the traditional financial system. And in the middle, instead of a chain of correspondent banks, you simply have the Stellar network. You have that single common infrastructure, which makes every asset interoperable. Moving on to the second last slide, I just wanted to highlight once again some of the advantages. Stellar is fast. Transactions are confirmed in about 5 seconds. It is low energy consumption because of the difference in that consensus protocol. It doesn't take anywhere near the energy consumption of something like Bitcoin. Transactions are also very low cost. 1 cent pays for thousands of transactions. And it's also final right away. There's no need to wait for multiple blocks to make sure a transaction can't be reversed. Once it's approved, you know it can never be changed. So on my final slide, I just want to wrap up by coming back to why all of this is important. We all have the opportunity to set a new global payment standard. We've seen the possibilities of how the internet has increased access to information, and we believe that blockchain technology, if designed smartly and correctly with stakeholders like yourself and like the speakers we just heard from, can do the same for financial information and make sending money as easy as sending an email. If you want more information, you can go to stellar.org. Thank you very much.
All right, there you are. Thanks, Jason. That was really informative. Wait, don't go away. I do want to throw a couple questions at you.
Okay. Sorry.
I got you. You can't hide. Just a few questions I wanted to ask. One, is Stellar Development Foundation currently active in Ukraine, and how do you partner with entities or how do we partner with entities in Ukraine?
Yes, of course. So the Stellar Development Foundation, of course, is active in the Ukraine. We are working with the Ministry of Digital Transformation and in conversations with companies about potential future ways to use Stellar. of course, until the law on virtual assets is complete and the full regulatory analysis and thinking through some of the points that Deputy Governor Shaban raised. Of course, we don't have anything live yet, but we're very excited for, as that law develops, we want to get started very quickly. We hope to have an anchor in Ukraine, for example. In terms of how to get started, from a technical perspective, building on Stellar is very easy. We have very easy to use SDKs and documentation, and as an open permissionless network, it's of course designed to make it easy for people to integrate into it. So it's simple. It takes very little code, quite frankly, and we at SDF are always happy to, like we talked about at the beginning, work with companies and governments and help them understand how they can build.
Great. Let me ask you one more final question. How do you see kind of private sector stablecoins working together with potential CBDCs issued by the central bank, and how can institutions like all the ones gathered here leverage both CBDCs and private sector stablecoins?
Yeah, it's of course going to vary somewhat country by country, because as I think it was President Dubas was talking about, there could be different designs for CBDCs. One version is the central bank actually issues it and interacts with individuals directly. Another version, and quite frankly, from the conversations we've had with central banks and international bodies around the world, probably the more likely, at least initial design, is one where people sometimes refer to it as a two-tier system. So commercial banks would be, so the central bank would issue to commercial banks, and then the commercial banks would interact with the retail consumers. That could be using the same asset, or it could be a situation where there's an interbank CBDC, that's what's issued to the financial institutions, and then those financial institutions have a separate digital asset that they issue to individuals. So the short answer is it could vary. I think also one other thing to keep in mind, there could also be use for different assets for different use cases. So for example, for payments, it might make sense to use a retail CBDC issued directly by the central bank. But for trade finance, it might make sense for a bank to issue a separate digital asset and then build certain features around that. This once again gets back to the point that with blockchain technology, you can build security and specific features into the asset itself, even though it's all on the same network, on the same infrastructure. So it will vary based on how we all design this.
Great. Cool. Well, that was very helpful. Thanks very much for the overview and additional thoughts.
Thank you.